Welcome, Siobhan. And as you know, the bank is out with the Bureau of Economic Research with the fourth quarter business confidence index. On the face of it, we're not going to have much to talk about. I mean, the index barely moved 1 point from 39 to 38. But that's the wrong assumption. If you go through the detail, a lot of interesting dynamics unfolded in the fourth quarter, good and bad. So the one thing that struck me was this huge rebound in confidence among the building contractors. Take us through it.
Sure. So building contractor confidence increased by 17 points, which is itself
That's
quite a big jump. And it actually has taken confidence for building contractors to 46 index points, which is equal to its long run average. What really seems to be kind of filtering through is improved activity, particularly as it seems that the kind of momentum has been built in the rebuild in KwaZulu-Natal. So recovery after those very destructive floods we saw earlier this year. And also as we see quite good performance in the residential sector.
Okay.
There's also quite a positive outlook from the sector, and it would seem that it's about positivity and anticipation for build related to your independent power producer program, so the renewable energy coming online. We are seeing projects making it through financing, and so we're now entering the building phase. And also as embedded generation build for different companies starts actually picking up after the registration process.
Okay, well, so that's quite encouraging because it reflects in civil construction that is also starting to show new signs of life. The stats that was published a couple of days ago from Infrastructure SA showing a pretty decent pipeline when it comes to infrastructure projects. So it's a good story. Let me switch to the bad news. So retail and wholesale. I mean, these are two sectors that for the last year and a half actually kept the BCI relatively high, and suddenly the fourth quarter comes along. So confidence plummeted. I mean, when you look at wholesalers, it's down 13 points, and if you look at confidence amongst retailers, it's down 9 points. What's going on here?
Well, it is actually largely a consumer story. So even when we look at wholesale confidence, when you look at their sales volumes, the real decrease happened in sales of consumer goods.
Okay.
And that then obviously then filters into your retailers, which have seen decreased sales volumes across the board. And if we cast our minds back to, lockdown, we had the great home renovation, which really boosted your durable sales, and that seems to have come off. And then as we started being, coming back into the office, there was, the great kind of clothes shopping spree and other pent-up demand that, everybody was out on a shopping spree. And now that is over. And then over and above that, your non-durables, your food, your fuel, etc., even those sales volumes are going down. And that's really been affected by the fact that we've seen such huge increases in the prices of food and fuel. So quite a lot going on there. And then to add to it, the monetary policy moves we've seen, so increasing interest rates and quite big increases this year, are also starting to filter through into consumer demand. So, really being buffeted from a number of sides. It is making life difficult. And then unfortunately, what is also definitely an impact, going to have an impact, is this increased amount of load shedding that we're having this year.
I mean, that is something that was very clear in the results. I mean, if you are a retailer, you are now facing weaker demand for your product for the various reasons that you've discussed. But then you have load shedding on top of it that is actually reducing your trading hours. Your sales get knocked. And then you have to incur massive costs to try and manage load shedding that hits profitability. Bad story there. Anyway, let's move to manufacturing. It's an important sector. Confidence levels are very low. The fourth quarter is no difference. But the one thing that kind of struck me, paging through the detail, is that our exporters are now starting to complain. Is that your sense?
Absolutely. And, this is the thing. While we talk about retail here in the country taking a bit of a knock, the food and fuel story is not a South Africa only story. And so, it is likely that the same kind of expenditure patterns are taking place across the rest of the world, and that is going to have an impact on demand for manufactured goods. So it is, I think, quite a challenge for them. They probably face a difficult year ahead as we expect a slower economic activity year, not just for South Africa, but the rest of the world. And again, being knocked by load shedding. And it's not just necessarily that activity is halted. Some of these manufacturing companies have got some kind of generation in available to make up for these gaps. But the price of diesel is now so high that running your generator is so much more expensive, and that's really cutting into profit margins quite substantially. So, again, kind of been knocked from multiple sides.
So they face similar challenges like many other respondents, rising costs, particularly now to the exporters. Their destinations, our trading partners, are likely to see recession. So certainly something to keep in mind. So the confidence, the BCI is flat in the fourth quarter. It's in net negative terrain. There are more pessimists than there are optimists. Is all lost? Final remarks?
I don't think so.
Okay.
I do think that there is a very deliberate move by government and private sector to invest in investment, to invest in your private sector fixed investment. And it's for power. And power is really our major issue right now. This high level of load shedding is going to have a negative impact on economic activity. And so, we do know that red tape has been cut, that we are seeing more and more projects being enabled across the country. And South Africa is so well placed for renewable energy, both in terms of wind and solar power. So we have the potential. Unfortunately, it is going to take some time. So, I think that we're going to see the subdued activity for a while. And it's not that nothing's happening. It's just that these projects are so big that it is going to take some time before we actually see their impact on the economy.
So there are one or two countervailing factors, and I can throw into the mix kind of a nice recovery in domestic and foreign tourism. That certainly is another important underpin. So all is not lost.